Welcome everyone to my channel. I'm super excited to be sharing this information to Boom and Crash traders around the world. So I can guarantee you that at the end of this training, you'll be so happy and you'll be excited that you stumbled on this tutorial. It's going to change your Boom and Crash trading forever. If you let it, if you allow it, because this training requires discipline, patience, and consistency. You have to get rid of all those your indicators, get rid of the ideology of making $100 every day in Boom and Crash trading in synthetic market. It's not consistent, it cannot be maintained. If you look at professional traders around the world across all financial instruments that have been successful in their trading, you will see that they all share the same ideology of looking for high yield setups. They don't trade every day. You see them taking one trade a week, sometimes 2 trades in 3 trades a month, 2 trades in 2 weeks, and when they stay on that trade, they can be there for days and make a lot of money. So let's get right into it. So I'm going to show you an outline of what we'll talk about. So this training is going to be about, it's a top secret. It's really top secret. By the time I'm done, you get to understand why it's top secret. Number 1, you will learn how to trade Boom and Crash using price action and market structure. Price action and market structure trading. It's something that has been around for a very long time. Actually, it's almost like the market is designed to move in structures across all time frame, from the 1 minute, 5 minutes, 15 minutes, 30 minutes. If you look at the market, especially when you alternate between candlesticks and line charts, you're going to be seeing market structures and break of structures every time. So it's your ability to be able to identify the structures, and when they break out, that's when you get to make money. So number 2, I'm going to rush this back. Number 2, how to run a good market analysis for high yield setup. There's a way to run a market analysis. There's a correct way to run it for you to be able to spot high yield setup, so that when you place a trade, you make money over a long time. Then within it, you have what time frame to start from. What time frame are you looking at doing your market analysis? Is it 15 minutes? Is it 1 hour? You don't want to go to a time frame that is way too high and way too low, depending on the asset you're trading, because some assets require that you go for a longer time frame, while some others you can go short for a lower time frame. B, this is the part that's going to really change your trading. Just for the record, let me state first how to use Fibonacci tool for Boom and Crash trading. Right? I've not seen this anywhere yet, so it's going to be a big deal for whoever is watching this video. It's going to change your Boom and Crash trading. At some point I was thinking of removing this Fibonacci tool and using it for my class, but what the heck, let me keep it for free now. I could decide to take down the video in the nearest future. So next one, how to use price action and indicator. I'm going to show you how to combine price action trading and the use of indicators. See, the problem is people keep changing indicators and using different indicators, and at some point it fails them, they move over to the next, and they keep going, and they get frustrated and they leave trading to go. You see, the problem is not really in the indicator, or rather the success is not still the indicator. Where your challenge is understanding market psychology, the way price moves, the structure it forms, and the break of structure. When you understand that, you can use that to your advantage in maximizing whatever indicator you have. Okay, moving average 21, moving average 55, moving average 50, moving average 200. See, they lag good. They all lag. We know indicators lag. This is why you have to use indicators as a secondary option to your price action movement. Okay. D, the best time frame for entry. What time frame do you use to place a trade? After your market analysis. Remember, if your market analysis is wrong, there's nothing you will do that will make you enter into the right trade. If your market analysis is wrong, you always make wrong trades. So best time frame to use after market setup and market analysis. 3, we are going to learn how to identify key levels in trading. Key levels in the sense that in the financial trading world, be it Forex or in this case synthetic, a lot of names have come out in the past, and you get to hear, I mean, we all know, every trader knows about support and resistance level, right? But it's basic. But over time, you start hearing words like order block, ICT trader. You start hearing words like, okay, there's supply and demand. What else again? Smart money concept. You know, all these things are good, right? I'm not saying they're bad, but at the end of the day, what you just want to get is you want to understand how to identify key levels, and where to identify them. These are things we talk about. Then 4, you're also going to learn how to identify market structure formation and breakout. Like I said before, the financial trading world market is full of structures. You can find the structures everywhere across all time frames and breakout. But the challenge is, if you lack price action and market structure knowledge, you cannot even tell when a structure has been formed. You cannot tell when a structure has been broken, and you cannot tell a fake out from a real trade, right? Then 5, you're going to learn how to execute, and the last one is patience, which is the most difficult one. After learning all this, if you cannot have this patience, you will find it difficult to make money at all. Okay, so now I've mentioned this, let's go over to the trading. You see the messy chart I was talking about previously. You don't want your chart to be like this. I personally hate trading with too many indicators. It's very misleading. At the end of the day, you end up wasting your time. You want your indicators to be clean and clear, right? You want it to be clear. Hold on, I'm trying to see how I can access from 500. Okay, let me change this so that you can see. Oh, you understand what I mean by messy charts. So let's go to yeah, this is what I'm looking for. So from 500. Before I wanted to explain what price action is, but I will leave that in the link below. I'll leave that in the link below for price action and market structure, so that you go read up. So that I don't want this video to be too long. I want it to just I want us to get straight to the point. Okay, so this is your Boom 500. Okay, let's set something straight. If you look at the Boom 500 market, you will see that it's more bearish than bullish a lot of the time. It's more bearish than bullish. A lot of people don't know that. Yeah, there are times where you see spikes on 500, like this one here. You can see here's a good spike, right? However, generally, the general trend from 500 is, yeah, you can see that now, weekly chart. It's on a big bearish move. So now let's start. I'm going to take it from here. Let's take it from here, right? Yeah, previous trading. So the question is, let's start from running the good market analysis for high yield setup. Question is, when and where do you know where to buy and sell in from 500? If you want to see long and high yield setup in 500, one thing you should pay attention to is on higher time frame. In 500, doing your market analysis, you have to begin from the high time frame. You have no business going in 15 minutes. 15 minutes is full of noise. There's so much noise every 15 minutes. However, on 4 hours and on the daily chart, you can find markets that are precise, and you can be able to catch the underlying market trend, underlying dominant trend. I use that word underlying because at first it's hidden, but for traders who are experienced, they're able to tell that this market is going down. So let's look at this chart. When you look at this chart, you can tell that this market is on a serious bearish move. Why? Apart from the diagonal trend line I put here, you can see lower low and how do they call it? Lower low and lower highs. Yes, that's how you can tell that the market is on a downtrend, and this is on a daily chart. So I'm going to pick it from here, right? I'm going to use how to spot. How can you tell that the market will reverse from here? That's the point. You just want to know where will the market, how high will the market get to? This is where you bring out your Fibonacci tool, right? Now, remember, I told you want to spot key levels and you want to know how high the market will go. Let's imagine that this market has moved from here to here. That is, from this point here, this high point to this low point. That's moved. This has been days. Now you know the market is on a downtrend. So whatever is happening on an upward movement right now, upward movement this way, is actually a retracement. It's retracing to gain momentum to continue in its bearish move, right? So how do you do this? First of all, when the market keeps coming down, why is it tracing? You bring out, you use your horizontal line, you use it to mark, I call it a pressure zone. Generally, it's called a pin bar, right? A pin bar, it can be a bearish candle, it can be a bullish candle. If you look at this trade here, look at this chart. Where's your pin bar? This is your pin bar, the obvious peak. I'm sure you can see this zone. This is your pin bar. That's one. This is your pin bar. If you can tell, I've not really talked about the awesome oscillator yet. But we'll get to that part. So you can tell this is your pin bar. You map your pin bar already. Put it there. That's not all. After mapping your pin bar, you use your Fibonacci tool. You place it at the highest point and you drag it down to the lowest point. Guys, can you see that? Can you see that? Did you see what happened? From the highest point to the lowest point. You can see that, right? Now, with the Fibonacci tool, I will rush this in explanation. Like I said, I don't want the video to be too long. You have, in the Fibonacci tool, you have three reversal zones that are major, three retracement levels. Those are levels that a lot of traders are looking out for. The first level is major levels. Skip this to 3.6. Skip it, is not useful for Fibonacci tool in this training. So you're looking at 38.2, 50 level, that's 50.0, and 61.8. 61.8 is the last line of defense for retracement. 50 is the second one, and 38.2 is the first one. Okay, so when a market is on a trend and you start reversing, or rather start retracing, when you draw your Fibonacci from the highest peak to the lowest peak when you decided to retrace, you can easily tell that the retracement level tallies with the pin bar level, which is your pressure zone. This zone here, you map it out. You can see how the Fibonacci tool and this level, you can see how it tallies, right? Okay, now that is established. Now the question is, a lot of traders who are aggressive in their trading will just place a pending order for a sell here, especially for those who have a lot of money in their account. They can put a sell here and the market starts selling and make a lot of money, and see how long this moves. Went for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 20 days, 20 good days, that's more than 2 weeks. This is a lot of money, just even 0.2 lot size. So now for conservative traders, you do not want to take this approach of selling right off from here. You could do that, but there's still a better way to go about this. You can just map the zone. Concerning your market top-down analysis, you can still step down to a lower time frame. This is where you now go look out for what I talked about. Now in this training, we've talked about this is the key level right here. Identify the key level. You've seen it. You've identified the key level. So now what we are going to look out for, we've talked about the Fibonacci. We're going to look out for how to use indicators with the price action and the best time for entry, market structure formation and breakout. So You now go on a 4 hours. 4 hours. The 4 hours. Yeah. This is your 4 hours. Remember, we mapped this place already. Your 4 hours. If you want to see a clear chart, sometimes you have to shrink your chart, zoom out, so that you see a market from a larger perspective. You can tell now that this is really a retracement. So your 4 hours, I'm going to change this to a line chart. Watch what will happen. Remember, this is your peak here. At this point, what are you looking out for? You are looking out for market structure breakouts, or you are looking for chart pattern formations, right? To get this done, you have to look at confluence zones. That's confluence zones, meaning multiple areas of support and resistance where the market was finding it difficult to break through. Remember, you're looking out for a sell trade, right? Yeah. You want your candlestick to close below your moving average. This moving average, let me take it for you so that you get to see the setup. This is the setup. Period 21, shift 1, exponential, apply to close. You can put any color you want. I'm sure you're able to see this. Okay, and it's on it's only on minutes and hours. It's not on daily. Okay, just minutes and hours. Put it like that. But you can do whatever you want to do. So now, if you look at this chart on the 4 hours, you can easily tell the places where there are multiple support and resistance, right? This is the level. It is pretty obvious. This is the level, right? So I'll take my line. I'll look for those zones. Okay, this is, I can say this is 1, right? This is 1 here. Yes, you can see there's like a double bottom here. There's a touch here, 2, touch here, 3, 4, the other one here, 5, 6. You know, just the list, just even when you take it backward, so you get to see more. Okay, there's 1 here, there's 1 here. When I change it to a candlestick, you can see rejections here. You can see multiple rejections. So this is your area where you're looking at for market breakout, right? These zones, you're mapping out the zones. And if you are not sure for 4 hours, you can go back to day 1, daily chart. You will still look out for these zones. Let's see. On the daily chart, on the daily chart is even much more clearer. On the daily chart, look at it here. 1, 2, very clean, very clean. So I think we'll stay with the daily chart. So yeah, what you're looking out for, you're looking out for a breakout on the daily chart, on the structure. At the breakout of the structure, this is where your sell starts. For those of you with not too huge capital, you can break it to 0.08, and you're willing to wait. You're not in a hurry to make money, because they say if you want things that you want to last for a very long time, they are not rushed. So you don't go around and start trading on every time frame, 5 minutes, 15 minutes. So with this information, I believe you can go across all other synthetic pairs and see and cross-check to see if what I'm talking about will work for you. And I feel there's something I failed to mention. Yeah, in your awesome oscillator, you can see that when the awesome oscillator is below 0 level, is a sell. When it's above 0 level, it's time for a buy based on this strategy. If it's below, so look at it here. You can see that the awesome oscillator is already above the 0 level, so it tallies with the sell opportunity. Look at it here, above. So it's time for it to sell. Start selling. You can see that, right? Very clean and proper. Okay, let's go to Boom 1000. Yes, let's go to Boom 1000. Boom 1000. Something I need to show you. Okay, back to the daily chart. As you can see, there's something happening on Boom 1000. Okay, then for the record, just as Boom 500 is mostly on a sell, Boom 1000 from 1000, it's moves really fast when it's buying. So at the moment, you can see that it has been selling. But this is what happened here. This is the market structure. Market moved from here to this point, and it went back up. And the second time it was coming down, it could not break the previous low. You see, it's giving an indication that market is about to change direction. This is a switch in momentum. Then it went back up, although it could not break the previous high, and it came down again, almost like a double top, but like a slanted double top, like a skewed one. Sorry, double bottom. Then you can see this is the structure. You can see the structure, right? It's really clear, right? So the question now is, how do you run your analysis? How do you tell where the market is going? I can easily draw a market pattern here now. There's the structure here that is being formed. It's a structure here that has been formed. Let's see. I'll change it to line charts. This is making higher lows. Then pick my, I think I draw, I'm looking for multiple touches too. Multiple touches. Remember, multiple touches. There's one here. There's another one here. Let me map this now for you. There's a touch here. 1. There's another touch here. 2. There's another one here. 3. You can see that. And I think this is part of it, right? Put it to candlestick. You see there's a wick there. Yeah, you can see that wick. So you can count this one as 4. And that thing is, you're going to add now you've put in your trend line. You're going to add the horizontal line. The same thing, you're looking out for multiple touches. This is where market kind of broke out. So I'll add this one, but that's not all. Just to be on the safe side, I'm going to add another one on this zone here. You can see these multiple touches here. 1, 2, 3. If I change this thing back to candle, you can see that it has already broken. This is the 15th of March 2023. So what does this tell you? This has broken out of the charts. This is a chart pattern formation. I can't remember the name now. I can't remember the name of this pattern, but it's a pattern anyway. So now it's broken, right? What you're looking out for right now, if I'm to take this trade, most aggressive traders, this is a daily chart, remember, most aggressive traders will, at the close of this candle, we start buying. But I wouldn't do that, probably. I'd rather wait for the market to be traced back down to this level. Probably give a double bottom. But if you trace it back to this level, then it's a good buy. You can place a buy and wait. The interesting thing about the boom and crash market is, or the synthetic market, is that because it is not affected by world events, so there's no unexpected news or a crash of economy somewhere that's going to affect the movement of the indices. It's purely technical analysis. So for my kind of trading, I can decide to enter with a low lot size, and I'll leave out the stop loss. I'm not putting out stop loss immediately. I want to see what will happen in the market because there's no news coming up. So why I wait to see? So you can see what's happening right now. So you can easily tell. Then how far will the market go? This is how far the market can go. I'll take my Fibonacci, find the highest point, drag it to the lowest point. Yeah. So you can tell that the market will get to the 100 level. And you can see how the 100 level tallies with the pin bars here. You can see this stop out here. So there can be a stop out here and a minor retracement given under formation. Then it will continue in that direction until it gets to a reversal level, which is reversal level 127.2, 141.4, 161.8. So guys, this is how to trade boom and crash. At this moment, I've not even gone to the lower time frame, but I can already tell what is going to happen. So this is okay. Let me take it down to Crash 500. Let's see if we can find anything on Crash 500. Crash 500. Yes. Okay. Wow. You can see Crash 500 is purely on a sell, right? Now, you see, let's take it from this point here first. There was a movement. There was a movement from here. And it looked like the market was pushing really hard. And when it got to this point, it came down. Why? These are the questions you ask yourself. How far will the market go? So, the same thing, you take your Fibonacci, you draw from the highest point to the lowest point where it's there to retrace. You can easily tell, you see why there was a struggle here. This point at this zone is a consolidation zone. This is a consolidation zone where the market wants to change direction. And if you look at this zone, it tallies with the previous pin bar stopper. Again, aggressive traders will place their trade and start selling, while conservative traders will wait and go to a lower time frame to look for a market structure formation. Now, this formation, before you see a market turn around, it still follows laws of reversal patterns, reversal chart patterns. You're looking for double top, you're looking for triple tops, you're looking for head and shoulders. So at this point, you can see this was the first point. This was the first point the market stopped, got to, that you wanted to retrace. Try to come down, went back up again, got to this point, came down. At this point, a lot of traders make that mistake and they start selling. No, it cannot give just, it's not going to easily give up. It's going to try to break up again. And the third time, watch what will happen. This was the highest point. The next point, after it came down to this level, from here to this level, sorry about that. After it came down to this point, this level right here, it went back up again. Notice that it could not break the previous high, so thereby forming a lower high. The second time, I think you can still call this a lower high because it's lower than the previous one. If you put it at the line chart, you see how low it is. So this is showing you that the market is changing direction. At this point, this is when you start putting out your sorry about that, map this thing again, so we know what we're doing. Yep. Okay. At this point, this is where you start putting out your lines to map the structure when it's broken. So this is 1, 2. Let's see if we can find a structure on the daily chart. This is a structural level here, 1, and it went back up. So we're going to map this zone 1. Go to 4 hours. They are mapping every structural zone. This is the first one. Then the second one, but if you can see, okay, yeah, there are multiple touches here. The second one, see the other one, see another one here, 1, 2, to map this zone. So this is 1, this is 2, this is 3, this is 4, this is 5, this is 6. You can see all these zones. I'm sure are you seeing all this? 1. These are multiple touches. These are what they call, these are consolidation zones. Sorry, confluence zones, not consolidation. My bad. Consolidation. You can see. Put it on the candlestick. So you can see when there was a breakout and there was a retest before you start selling. But to be safe, I'd rather trade at this level because you have a stronger candle break. This one is not too clear. It's a stronger candle break here. This is where I'll start selling. So let's see how far the market has lasted. So you can see how wonderful this is. Now it has gotten to this point. It looks like the market is about to retrace again. Now let's imagine that this is the lowest point that the market has gotten to. If you are to draw this Fibonacci from here to here, you can see that the market is heading up again. And most people are, but you can buy here. You can buy here, but at the same time, you can lose money. So I'd rather wait. So this is your first stopper. It can be here. You can see how here tallies with here. I believe this market will go down even further. Drop even further for reversal. So here's your first point of reversal. Then the second one, okay, there's no second one. I think it's just here. I don't know about this point here. Okay, maybe this is one, but we cannot say for sure until the trend is complete. be sure of where the market will be. So guys, this is just how I've been trading Boom and Crash, and I think you too should apply this method. If you really like what I've talked about, I want you to drop comments in the video below. Let me know things that are not clear. I'm going to make a video especially for you to give you insight on how to take advantage of the Boom and Crash market. Also like, subscribe, share this video to your friends and every trader you know that you want to be successful in Boom and Crash trade. So guys, don't forget to like, don't forget to comment, don't forget to subscribe, share, comment. So thank you. Peace.